And welcome everybody to the Friday, December 6, 2019 pre-market rundown. This is Triggercharts. I'm the co-founder, Andrew Horowitz. Thanks so much for joining me. Sorry we weren't available last week to be here, but you know what? It was Thanksgiving and the day after Thanksgiving. Great day for leftovers. Fact was that markets were kind of open a half a day anyway. And you know what? Volume was low. No reason to really trade those things. There's an important lesson in there, by the way, to be learned. One of the things that I've learned over my 30 years of trading is that it's not always essential to trade every single day, minute, hour, week. Look for the setups, look for the opportunities, look for the high probabilities. And those are the things that you really want to trade. Just going in there to trade, just to trade, I guarantee you, you know what that's going to do? Provide you wonderful tax losses by the end of the year. So make sure that your setups are really good. Make sure that the opportunities are there. And of course, the risk return, the probability is in your favor. And that's everything that we talk about all the time here when it comes to trigger charts. It's all about putting the bias of the trade and direction on your side, looking for holes, vast zones, and those horizontal moves through time that are quick, rather than looking at the consolidations, which are simply just, you know, that can go on forever and ever and then knock you out. So here we are. A couple things I want to mention to you is that during this discussion today, of course, this is for educational purposes only. It is not an offer to buy or sell any security. It's not a recommendation at all for anything, whether it comes to futures, stocks, Forex, etc. Trading involves a substantial amount of risk, and you want to make sure you understand that before you enter into that. So do yourself a favor and understand, again, this is just for educational purposes only. All of these webinars will be recorded and on our YouTube channel, Trigger Charts. Also over at triggercharts.com, you can see all of that with a host, just an incredible amount of training material as well. The fact of the matter is that, you know, we put all this training material out there to kind of give you a real rich look at how this all operates. But in the end, if you understand some of the key components and the real basics of what this is all about, the idea that we're looking for the lines in the sand and we're looking for those areas that can see substantial moves through resistance or move down below support, and what those really represent, it's pretty, I would say, easy to utilize the system. And that's why we've called it red, green, and, well, we got blue in there, and we got red, we got yellow, we got green, a couple of different colors, but very basically an easy way to look at a chart. So we're going to go through that. So now that we understand that, we'll close that down there. One more thing I want to mention. Yes, it was Thanksgiving last week. It's also the end of the year towards the holidays. I was just back. I just got here from a wonderful breakfast for the Broward Partnership, which is a homeless advocacy group, as well as helping to find homeless people place to reside, get them jobs, etc. Whatever your charity is, it's a good time of year to give a little something to them. A little side note for me, but it makes you feel really good. And if you can give something this time of year where you've been successful, hopefully in your trading, give back a little bit. I think that's really admirable, and it's just a little reminder to get that done this time of year. All right, so where are we? So trading in the App Store, the trading App Store for Trigger Charts, and for the entire trading App Store for TradeStation had a little glitch in the month of November, but it seems to be fixed right now. If anybody's having any trouble with any of the information or any of the tools in the trading App Store related to Trigger Charts, please give us a buzz or simply write to info@triggercharts.com or support@triggercharts.com. The start of December was pretty ugly. I mean, I think we all agree with that after a great November, there was probably the opportunity for a little bit of a take back due to the fact that there was such a substantial expansion of PEs and such a great market move in the month of November. December started off pretty ugly. We saw some comments about there's going to be a trade deal. There's not going to be a trade deal. There's going to be something. Maybe it won't be. It's going to be different. It's going to be the same. Maybe we won't get the tariffs off by December 15th. Maybe we will. I don't know. Kind of dizzying is the point. But you know what? What we have found is that the buyers are buying the dips because they believe that even though the world stage and the economics around the world are really problematic, the fact of the matter is that the U.S. is still seemingly an island that has a moat around it, which is not allowing any of these external problems to really enter in. While we have our own problems here in the U.S., we're not importing the slowdown in economic conditions around the world that we're seeing, that China now at a 6% long-term growth rate. We're seeing that there is a clear recession that is happening in Hong Kong, There is a recession that looks like it's going to be happening, very close to recession in Europe. And of course, Japan is having their own problems. But here, still looking like about a 2% growth, maybe 1.5% moving forward the next quarter. But did you see that jobs number today? 266,000 added to the payrolls. About 170,000 was the expectation number. So we're talking about 90,000 payroll additions more. And last month, where we saw a lot more, especially with the idea that the GM strike was going to take a lot off the table last month, this month brings some back. But you know what? This month was only supposed to be 170 with the addition. Somehow, the private payrolls that we saw at 66,000 on Wednesday through ADP didn't follow through. 266,000 new additions to the payroll is outstanding. Now, some of that, of course, is due to the fact that we are in the season where you have short-term hiring that goes on, due to the fact that you have service companies, you have retail establishments that are hiring for the end of the year, and you have things like, well, it could be Amazon, it could be UPS, it could be FedEx, it could be a lot of places that are hiring for the end of the year push. So that's something to be considered, and it may be a little bit of an aberration to the high side at the end of the year here. And we do have 40,000 more added to the payrolls due to the GM strike. So something to think about. But let's talk about some of the psychic indicators, the kind of the psychological, not the psychic, psychological. Psychic indicators would be fun to have, right? Oh, the stars aligned. We should maybe buy this or that. The psychological indicators. So we have the Spearman, the McClellan, also seeing new highs. We talked about this. As a matter of fact, I'll bring this up really quickly if I have that on here. Here we go. We talked about that rollover right about here a couple of weeks back and said that things were looking like it's going to start rolling. And we did get that rollover after the spike, and that happened. And that was confirmed with the McClellan as well. We saw that the 52-week new highs and new lows were starting to show a divergence pattern on this overall. So when we looked at this, we said there was a chance of this to roll over. It rolled over pretty hard, and now we're seeing buyers buy the dip. Right now we're seeing the Dow Jones futures up 180, the SPOOs or the S&P mini index futures up 19, and the Qs, the NASDAQ, up 63 on that major move by, in response to the economic numbers that we saw recently, just this morning, half hour ago that was. Economics this week we saw some weakening conditions in ISM manufacturing, ISM services. It is kind of weird. I was finding that the backdrop of pretty much everything that we're seeing is weakening, but yet employment is staying really strong. So something is not exactly right in this whole picture. But I had an interesting discussion about gold. And we have this represented on the right side of the chart here, where you see that gold has been in an uptrend since June, started to lay off again when it looked like the trade deal may actually get done. There was some talk about that. There was some concern, and we're starting to see a little bit of consolidation here. The conversation I had with someone who was looking at this from a technical pattern was all about where is the upside downside. When you look at this on a weekly basis, and you look at this and you kind of stretch this out a little bit, just on even on daily, there is this incredible uptrend that's been going on, right? We are seeing that there is this continuation of this uptrend that we saw, and it could be looked at as almost a flag pattern here. You know, if you kind of envision that flag right there. Or maybe I can draw, kind of like this flag pattern here. You look at that and you can say, well, this is a continuation. If we do get to the bottom, it could bounce off. You can see a kind of continuation on the upside to the other way. I looked at this and I saw something a little bit different. I saw that when we look at this area right about, let's kind of go here. About the 134 range is really important. 138 is pretty important right now, trading pre-market at 138.10. If we get below that, 134 is the level. And then honestly, if you really look at where this is, it's somewhere around the 125, 124 level is really the support on gold. If we do get a trade deal, if in fact we do see economic numbers that are still solid in the U.S., and it does take the dollar up, and there are other features that maybe take away the concern for the geopolitical risk as well as the problems related to the U.S. economy and the world. If we see a bottoming in European data, and if we see the fact that some of the stimulus that's being poured into China is starting to help, well, we may see something here very interesting, whereas people are no longer desirous of holding on to gold. where they're saying that, you know what, I'd rather be in risk assets. Why am I going to hedge out of this? And why am I going to look for these different kinds of assets that maybe are no longer necessary? Because what we're finding right now is, well, the risk really hasn't materialized. The fact of the matter is, however you want to slice it, a lot of the risk that was looking like it was a big concern over the last few months hasn't really materialized in any significant manner when it comes to the markets right now. So when you look at this chart and you think about that, and we look at it from just the very aspect of where is that line in the sand, and this is a daily chart, and I use this for educational purposes. I mean, if you look really right here, right there, there's a bit of a hole. There's an area, not a big deal, but from about 138 down to 135 is an area that's a big of concern. You get another hole that's kind of in this area right here. So when you look at this let's go there. When you look at this and we look at all of this, what's really happening right now, it seems that, if we do continue with this risk off, you do see this gold is starting to come down. You see the dollar is moving up dramatically today. So the bottom line is, what we're finding is that there is a significant amount of risk on that may benefit the downside. When you think about that, you also have to think about the gold miners like GDX. You look at the inverse, which is NUGT, or the inverse the nugget is the 3 times positive, and the inverse 3 times negative is DUST, D-U-S-T. But buyers have been coming in to buy the dips. Good news is being bought. Bad news is being seen as, okay, not such a big deal, opportunity. So we're still in that same thread that we've seen throughout the year in 2019, which has been that, we're going to give the markets the benefit of the doubt. We're going to give the economy the benefit of the doubt. We're going to give the trade deal the benefit of the doubt. That's pretty much where we are on the trade on this right now. And one of the reasons for that is I want to share this with you. I want you to pay attention to this. Everybody, look at this, okay? The question is, why did we see such a dramatic increase in the market starting in about September? A lot of you have asked me, hey, Andrew, what's going on? Why do we keep hitting these new all-time highs? What is really the catalyst that is really driving the markets right now? And I want to share this with you. This is not technical, but what this is something to look at. It's a chart, but it's not technical analysis. I want to show you a relative comparison of something, because we saw back in September that the Fed was saying that they are going to be helping out the repo market by flushing money into the system on a regular basis to make sure that it's going to operate smoothly. It was an open-ended discussion that was going to allow for as much money as possible that would be needed to make sure that there was liquidity in the repo market. Well, lo and behold, check this out. Since September, there's been, actually, we're going to add another about $100 billion to this. About $291 billion was added to the repo market and to the systems, which is not being considered quantitative easing, which is really pretty hysterical. I mean, if you think about this, what are they doing? They're increasing their balance sheet. I don't care what you want to call it. It is quantitative easing. They're buying assets with money made out of thin air. So what's happening now is we are finding that there is this incredible amount of money that is going in. We see a 9% increase off of the base that was added to the treasury markets, or being bought up, and created a massive amount of liquidity. They're reducing rates even with the economy doing pretty well. No wonder there is a significant amount of movement in the markets, and liquidity, of course, is being flowed through into various areas. So the big question everybody has also is, will the Santa rally even happen? And the idea is that with the consolidation pattern that we're seeing now, the opportunity for low rates and for the Fed to be very accommodative and doing a little QE. Even though they're saying they're not doing QE, the fact is it's probably going to be a very similar circumstance that we see right now, unless something very odd happens. And what is that can happen? The December 15th deadline for an increase in the overall tariffs that are being charged on things like consumer electronics and a variety of other consumer products with China. Supposedly, if there is no trade deal that is in writing, we are going to see that there is going to be a significant increase on those. So we are seeing that moving the markets this week. Again, trade deal headlines, Fed pumping. Next week coming up, we got CPI. We got another Fed rate decision on Wednesday. We have PPI on Thursday. We have retail sales that are going to be coming out, which will be pretty important because we did see a little bit of a slip last month import and export prices as well. At this time, I just want to mention that you can get any of the Triggercharts Commander Series, Aileron, Altimeter, KRI Indicator. All of those have a 10-day free trial. If you want, if you haven't seen it yet, you're first time on here, go look at the reviews. We have more reviews than any other app on the TradeStation trading app store, and all of them pretty much are 4 to 5 stars. I think the average is 5 stars. So there's a reason for that, and the reason why people are so happy with this because it makes it pretty easy. Let's get right into that right now, and I'll make one other point to you as we're clicking over to this screen, is that that basically, where am I here? Okay, basically that if you do in fact get a subscription to the Triggercharts Commander Series for the monthly rate of $149, we're going to throw in a 4-hour at your own pace, online, do it your own coaching session. There's a regular value of $199. So we're going to throw that in. So anybody that recently subscribed to the Triggercharts Commander Series, do me a favor, send an email over to support@triggercharts.com and we'll get you going. Let's take a look at this. Put your stocks into the chat. I'm going to put the word here. Let me type it so I can type it. There you go. Type it in the chat and we'll get to you some of your stocks here. Let's talk about what's going on with the SPY first. Kind of just look at this right now. Let's look at the daily. We're seeing that if we kind of move out, the aileron, which is not part of the Commander Series, by the way, but I sometimes like to look at this from a momentum indicator, kind of rolling over a little bit, and that kind of coordinates with what we're seeing here. But let's kind of zoom in. Let's take out some of these lines here. You know, what do we see? We see a consolidation that's going on. Basically, what we have right now is this kind of range, you know, right inside about here, I would say. And you can do this with the box tool that you have over on TradeStation. You can use your line tool. I highly encourage you to get used to using your drawing tools. They're invaluable. So check those out. Bottom line here is that when we look at this, there's a bit of consolidation going on. And, you know, whether it goes up and down a little bit, you still have this range. You know, if you get below pretty much, I would say the 305 number, you have the opportunity to kind of scoot down probably on this to about the, you know, I would say about 295 or so, maybe 296. But there is some decent support and another consolidation zone that you really could look at right below there. So, you know, downward pressure, if it does in fact happen with the S&P 500, really is not that great. I'm not that worried about it per se. Upside, I got to really question whether we can get past there. Again, you know, we're moving pretty well today, but, you know, there's some competing forces. We're really happy that we saw a good number on the employment situation. On the other hand, that also takes the Fed out of the equation a bit moving forward. Let's see. What do we got next? Let's look at the Qs. Similar pattern. We kind of looked at these bottom line and top lines here before. But look at this pattern that we're seeing here. Let's kind of zoom in. Looks identical to the S&P 500. Pretty much you're going to find that across the board. Let's look at ROKU. So ROKU, I'm going to zoom out on this. I want to show you something interesting. And actually, I'm going to take off... I'm going to take off the aileron. I just want to get this a much bigger chart for you to see. And what's interesting about this, there's some really great trading opportunities in ROKU. One of the things that happened back in the mid part of October was the big announcement by Disney that, hey, you know what? We signed up 10 million people in the first day to Disney Plus. And everybody's like, oh my God, you can get that on ROKU. Therefore, Roku's going to get a piece of the action for it. And this could be really a big amount of money for ROKU. There is some truth for that. There is some, you know, absolute truth to that. But at the same time, you know, there's really a limitation. The valuation of ROKU, in our opinion, is pretty high. And when you look at this from a chart standpoint, while it can't seemingly get below this line right here, about the 135, it's chopping around pretty good. On its earnings, its last earnings, it got sub 100. So what you have on ROKU here is kind of a couple of different zones. And I want to show you this because I think it's really interesting. This is subtle. This is not, I wouldn't say this is as absolute as some other ones that we've seen before, but it's subtle. You kind of, I'm going to draw like a skinny one right here. You have a zone right there. You see that? That zone is kind of an area that, you know, when you look back from right to left, always looking to left, it doesn't have a lot of movement, a lot of lines that intersect going left. All right, yes, you have this area in here, which has a little bit of a consolidation pattern. Here's another zone. We'll draw them skinny horizontally when we look at these zones, okay? So I would say that our meaty, beady, big and bouncy potential for a drop is kind of below this 140 line if we can get there. And then you do have the potential to get down to, I would say, the 115 area once again. Again, another little zone right here. So in this, I'm going to now draw a very big one. Can I change let me change my color. Kind of right in there is an area that you want to look at. From 130 down to about 115. So ROKU is something that I really think is a trading opportunity, a very interesting one at that. Peloton. Well, we don't have much on Peloton, but Peloton had this miraculous move because it is probably going to be the gift for the holidays, whether it's this one or another one. I don't know, a $2,500 holiday gift with a $50 monthly payment attached to it seems a little bit on the high end for most people. But nonetheless, it seems to be one of those, hey, this is going to be the gift for the holidays. Markets have really tagged it as that. So I think what we have right now is that when we look at this and we look at Peloton, and when you really think about where it's gone from, there is the opportunity to look at this, possibly, I would say, picking this up in the 30 range. Right now, trading about 31.57. There's not much you can go on. It doesn't have enough history. But if you just look at this from a chart standpoint, and very simply just a chart standpoint, you have kind of an area of here, which is the massive amount of consolidation. This is kind of the area that I would look at when it comes to the support level. So again, that's right at, I would say, kind of like 27.5 is the area that you want to look at for that. So Peloton's interesting. It has some bad press recently, and that's hurting the stock very dramatically. Let's see what else we got. All right, let's go to gold. I want to show you something on the gold. Okay, so there's a line that we said, we drew this a while back. And that's the nice thing about using the drawing tools on TradeStation. They stay. The drawing tools actually stay on the chart for you. So when you look at this, there's been some consolidation in here, and this is on the daily, but I want to kind of take this out. And I want to take this out to the weekly. Let's see if I can do that. Okay, there's your weekly. Now look at this. Very interesting. Much different look. On the weekly, what I'm seeing here, and look, it's still moving down $1.23 now, as the market is still holding up. But what's really interesting here is, I'm going to draw this again for you. There is a I would say that didn't work. Let's get back to my drawing tools. Okay, that's not the right one. Here we go. Got it. All right. So look at this kind of zone right here, all the way down to about 130. There is nothing preventing us on a weekly basis. Let's see if I can do this right, from getting those consolidations filled. That's down to what? That's down to 129, we'll call it. So when you look at this and when you really consider where's gold going, I think there is the better option, or the better possibility, that gold will actually be going lower than higher. There's a lot of congestion above. There's not much on the low, on the downside. Now, it could move throughout the range, pretty actively, whether it's going to be, I would say on a weekly chart, it looks very clear. Daily chart, a little bit more consolidation. Obviously, as you shorten up your ranges, it's going to see more and more congestion inside of that range. But the bottom line here is, when I look at this and when I see the weekly as weak as this, with good numbers from the economy, and the longer you go in time, usually with problems, the greater the probability is an opportunity for resolution. All right, let's clear that. All right, what was next? Oops, Red Hat. Not Red Hat, excuse me, Restoration Hardware. Restoration Hardware made a new high yesterday. I mean, look at this move from 80 to 233 in mid-July, where there was a concern about there was a slowdown in the economy. We would possibly go into a recession. This thing really, but look at this. I mean, from 2017 is weekly. 2017 sub 40 to 238. Let's look at the daily again. Stock is, look at that move right there. I mean, stock in July was down at 100. It's doubled plus. It's a thinly traded stock. Obviously, it's very reliant on the housing market. Whatever the housing market's going to do, we're going to see happen here. Bottom line is, just keep your eye on this as something interesting. Another very thinly traded stock that I thought was interesting. I mean, these are craters. This area that we're showing you right here, when you look at this and carefully consider, you have that there is this gap down from 200 down to about 100. Then you have a gap down from 100 down to about 35 in that range there. Starting to pick up. This would have been a good pickup here. Once you got over here, that was a beautiful trade. Once you got about over 45 and we saw there was nothing moving. Look at this. Classic gapping. but very clearly identifying those vast zones, the horizontal moves through time that are quicker than a vertical move through time, which is quicker than a horizontal move. Oftentimes you see a pretty good horizontal move that stays for a period of time. Then once you get over that level, like a springboard, like a release of major tension, an explosion, if you will, bam! What do we get there? Well, you get this great move to the upside. So what we're seeing here is that once we get over that 45, got into that, we got more consolidation, got into that. Now we're entering another consolidation zone here. So, hey, wow, what do we do now? Well, very thinly traded. I think the possibility from what the looks are of this, different than what this consolidation looked like. There's a much wider consolidation, couldn't break above, still got a lot of problems with the stock. Probability will get back down to about 75. That's where we look to say, hey, you know what? That's something I want to look at as an opportunity to move into. We've kind of a couple quarters where Stamps.com is actually doing better than they expected, even though they lost a couple of contracts with major players like the Postal Service. But what's happening here right now is an opportunity, as I see it, to kind of be a little bit patient. I think that's really important. Let's see what else is moving this morning here. Anything interesting that's on here? Zumia is moving, Zoomies. DocuSign came out with earnings last night. That's kind of finally moving up. Actually, it's interesting. Let's take a look at this. Where are we on the KRI? KRI's market's in equilibrium. We were really hot for a while. It resolved as it came down. This is a very inexpensive indicator. It does one thing. It does one thing well. Looks at one stock only, because it takes a broad picture of the entire universe of what's happened psychologically, what's happening from a technical standpoint with charts, and it really looks at the big picture. It just says, okay, is it safe? Is it safe to get in? Too hot? Too cold? You can see where these little dots were. It was like, hey, back up the truck. And here was like, hey, you know what? Maybe there's something we should be thinking about taking a little bit off the table for a little while there until we get a little bit of a basing again. So, and this kind of rolled over finally into here. This came up but then rolled down. There's a big warning right here. Markets can stay in the uptrend, can see overvalued, overheated, much longer than they can stay oversold, cold, overdone to the downside. What we have is a situation where we know that money is regularly going into markets, and you have to keep that in mind when we're looking at these kinds of charts and realizing that why do we see these big spike downs? Because it's fear and panic, and they move up and they resolve pretty quickly. Whatever that slope is, however they're looking, however they're going, the bottom line is that there's not more buyers. The proclivity of the markets are that buyers basically will be there at every turn, especially through 401k plans. That's why a condition like we have now, where there's employment that is really good, is really helping markets. Employment is the linchpin of the markets. Mark my word on this from what I'm telling you. Watch the employment numbers. Those are going to be the ones that are a real big tell on what happens with markets. The reason why markets find them so important right now and why the S&P minis are up 21 while the Dow Jones up 200 in the face of all this other stuff is the realization that you add 266,000 people to the payrolls, eventually they're going to have 401ks. They're going to start contributing on a regular basis no matter what the market is doing, pushing money into the market on a regular basis. It's mechanics. There's a couple of great articles on market mechanics. If you want those, send us an email. We'll get those over to you. But basically what market mechanics tell us is that there is a regular and definitive process by which there is going to be money in the markets, whether it's from regular 401k rebalancing or just putting money in, or it could even be shared buybacks by companies. So think about that. But the other one that we want to look at was, real quickly before we go, let's get over here, was Zoom Media, down about 7.8% today. This is what we're broadcasting this on today. Stock is pretty much in the toilet right now. Probably has the chance to retest 62. Currently trading at 64.20 pre-market after earnings. They had okay earnings, but not great. As opposed to DocuSign. Maybe I didn't type that in right. There we go. DocuSign, which is going to reach pretty much an all-time high today, right? 75. Yep, all-time high for DocuSign. Kind of tailored to technology companies. Thank you so much for joining me. I want you to make sure that you're here next week. Tell your friends, tell your family. Give them the link to the actual webinar registration. Use this product. Trade well, trade smart. I want to thank you for joining me, and I'll see you again next week. Thanks so much.